All right, what's going on, everyone? Welcome into the channel. My name is Gerardo. In this video, we're going to be talking about Hex and looking at its Sharpe ratio relative to those of both Ethereum and Bitcoin. So first of all, I want to thank you guys a ton for 7,000 subscribers. Didn't think we'd get here so quickly. You guys smashed another 1,000 in about 12 days. I think that's the quickest we've ever brought on 1,000 new people. So everyone who's new here, right, in the past 2 weeks, welcome in. We like to talk about Hex, Pulse Chain, mainly on this channel. Talk a little bit about some other ones, but it's usually just passing mentions, right? But if you enjoy this kind of content to the degree where you want more, go to the link in the description below, lookintohex.com, where we have our metrics, public charts, all sorts of charts, right? Anything you can imagine. And we even have the VIP list with the custom trading view indicators, private Hex metrics dashboard, the weekly VIP videos, and more. So check it out. First link in the description. But let's talk about the Sharpe ratio. What is the Sharpe ratio? Why are we even using it to talk about Hex? And you could argue that this is not the most useful indicator for something like cryptocurrency, because it takes into account, as you'll see, the volatility of the asset. And cryptocurrency is a highly volatile asset class, but nonetheless, even though you get bigger numbers on the volatility side, you can still do the math on it. So I think it warrants at least a look, right? At least a check to see what it says. And it says something pretty interesting. So this is the formula for Sharpe ratio. If you're interested, it's pretty simple. You have your expected value, your asset return minus your risk-free return. So this pretty much says, like, compared to a risk-free asset, something like a savings account or a bond or something like that gives fractions of percent, and we're using 2%, right? And that's honestly generous, because lately it's been fractions of a percent. But we'll say 2%. We'll be generous. We'll use our asset returns for, like I said, Hex, Ether, and BTC, respectively. And the expected value is simply your return, right? Your historical return to the power of the inverse of the period. Now that's just some math that you don't need to know, right? But this is what we have. So the return over the period we took, and the period I took was from December 17th of 2019 all the way to September 10th of 2021 was when I made this model, right? A few days ago. So it takes into account 1.73 years of data. So that's how valid this model is, so to speak, because the longer it is, the better, right? With something like this. And the Sharpe ratio, when it's done with traditional legacy finance assets, you generally have to use some other number that's not 100% uptime, something like 200 and something trading days out of the year effectively. But for crypto, we can use 365. We look at our daily returns for Hex, historically, for ETH and BTC in the same time period, right? From December 18th or 17th, 2019 to September 10th of 2021. And you see that in that 1.73 year time period, Hex returned, we can show this in percentages, right? Hex returned almost 9,000% gains. Ethereum returned a little over 540%, and Bitcoin returned a measly, right, 2%, or excuse me, 200%. I meant to say 2x. So roughly speaking, with Bitcoin, you got a 2x, enough to maybe keep up with the inflation of this last year, because we really inflated our money's supply base, if I'm not mistaken, by something around this number. So if you invested in Bitcoin, sure, you caught up to inflation, but you didn't really get ahead in this time period. So about a 2x in Bitcoin. Or wait, 200% return, excuse me, that's a 3x in Bitcoin, so a little more. I was being a little too harsh on Bitcoin. So 188% gain is on top of 100%, right? So you add them, you get 288%, divided by 100, about 2.88x. So for Bitcoin, you pretty much tripled your money, to keep it some rough math, in this period. With Ether, you multiplied your money by about 6.4. So again, it outperformed Bitcoin by about 2x, what we kind of already know at this point. And if we look at Hex, well, we have about a 90x in that same period of time. So 2 for Bitcoin, or excuse me, 3x for Bitcoin, about 6x for Ethereum, and about 90x for Hex. So that's your return row. Here's our risk-free rate row, which I explained is something like an interest, high interest, right? Savings account, CD, a bond, whatever, something that gives risk-free yield. It's about 2%. We're being generous, like I said. And to get the annual volatility, it's pretty simple. We just took the standard deviation of the data, right, of our data set of returns. So we look at how volatile each asset individually is. And again, we can look at this in percentage gains or percentage volatility. So we see that the annual volatility for Hex is about 195%. So about 2x volatility. With ETH, it's about 72%. With Bitcoin, it's about 73% or so volatility. And the reason we look at volatility is because, sure, you have these huge returns, but they're not without risk, right? The Sharpe ratio attempts to look at returns relative to their risk to level the playing field, so to speak. So you could say that, yeah, Hex does have, about 3 times the risk in volatility as something like Ethereum or Bitcoin. That's expected because it's less of a liquid market, but I'm impressed that it's actually less than 3x, right, the volatility. I should stop saying illiquid because we do have like $50 or $60 million of liquidity at this point. It's respectable, right? It's definitely more than enough in a capital efficient system to serve, probabilistically speaking, anyone who wants to sell their coins, as we've seen people cash out millions of dollars. But I don't want to go off on too much of a rant here. The point I'm trying to get at, right? We want to get to the point is that you have your return, you have your all your columns here, your annual volatility, and you end up with a Sharpe ratio on Hex of about 45, which is absolutely huge. With ETH, it's about 7.5. With Bitcoin, it's about 2.5. But with Hex, it's about 45. So the bigger your Sharpe ratio, the better. And a 45 on a Sharpe ratio, pretty much unheard of from what I've seen. So we do a little bit more math, and here we have a cool little simulation. This is actually a Google Sheet Monte Carlo simulation with 3,000 trials. What the heck does that mean? It pretty much means it runs different scenarios. We just, for those of you guys who are interested in the math, there's this function in Google Sheets called norminv. It's a normal distribution, and you give it 3 inputs. And so what I fed it was a random number from Google Sheets random number generator, and the standard deviation and the mean of the actual Hex, ETH, and BTC data. So we took the standard deviation and means from Hex, ETH, and BTC data, and we used them to create a normal distribution, because a bell curve is just defined by a standard deviation and a mean, right? You can define a bell curve. And so we define that bell curve and then pick random spots in that bell curve with the Google Sheets random number generator. And you can see that it actually changes every time I hit enter. It'll change the entire. Here, let's see. Here, if we edit cell, there we go. It runs the simulation again, basically. And we can do it as many times as we want. But every time we do it, we end up with something like this, where Hex is blue, Ethereum is green, and Bitcoin is red, right? And I blurted this out because I kind of wanted to build up to this. But this pretty much tells you if we're to, here, this shouldn't be in percentages because it's a lot harder to tell what we're doing. It's actually this column, excuse me. So let's just turn this back to number real quick so we can get a better understanding of what we're seeing. There you go. So in that 1.73 year time period, these are different realities, so to speak. So we're exploring the multiverse here, where Hex, follows its statistics and does whatever it does. And you see the scenarios where Hex is doing 73x, 50x, 57x. And for the most part, you see Hex rise to the top, right? The cream rises to the top. The best of the crypto rises to the top, which is blue. Here is the code for Hex. Ethereum comes in close second. not close, excuse me, far second place. And Bitcoin comes in close to Ethereum, but in far third place compared to Hex. And you see that, for the most part, the ones that have a likelihood of ending up with really low returns for the most part are the Bitcoin dots, the red ones. Right? I mean, there are a few Hex ones, but not that many, right? Most of them rise to the top. So this is pretty interesting, right? You run it in as many simulations as you want, and you always get a very similar result. Right? Just if you want 100x, you pretty much need to have Hex. All right, I didn't mean to rhyme, but if that's what this is saying, your expected return, your appreciation multiple versus trials, that's what these axes are. So if you want to multiply your money by 100 potentially, it looks like Hex is really your only move, right? You only see blues cross into here. If you want a 10x, well then you're pretty much okay with any of them, right? You're pretty much good owning Hex, Ethereum, or Bitcoin. If you had owned any of them in the last 1.73 years, it looks like. You could run the math and see if that's true, but statistically speaking is what we're talking about. So I thought this was really cool, interesting to look at. Yeah, just feast your eyes on the fact. I mean, yeah, the best rises to the top. I love to see it. So we can do some TA to finish off the video, but this is more or less the Sharpe ratio. Actually, I'm not done with this tab. What am I talking about? If we fix this and unblur it, you see that the portfolio weight based on these Sharpe ratios, and this is rough math, right? All I really did was take the the relative size of these Sharpe ratios and just scale it up to 100%, right? The sum of these to give you a portfolio weight. And it looks like you generally want to have, based on this model, you generally want to have about 82% Hex, so mostly Hex, maybe 13% Ether, and maybe 4.6% BTC. And this is if you're actually, if you believe in the Sharpe ratio model, right? If you think that it's worth adjusting for this risk. But if your risk tolerance is really high, you might not actually care about this model at all. So, it's up to you to determine if this model is useful or not, but I still love to see that it does say, yo, you should hold about 82% Hex, maybe 13% ETH, and maybe 5% BTC, which is tiny, right? Meaning, if someone were to invest $1,000 into crypto today, they should, assuming zero gas fees, you would want to put in 820 of those dollars into Hex, only about $135 into Ethereum, and only about $46 into Bitcoin. Pretty interesting. So that's just what the numbers say, right? If we pull up let's pull up our regression rainbow on TradingView as well as our risk metric, just to show you guys that our risk metric is still below 0.5, right? We peaked our head above 0.5 for a bit, 0.52, came back down. And so, I mean, things just cooling off a little bit. What I like to see is that we generally have started forming, we have a higher high here on the risk metric compared to this one over here. So maybe you can't do traditional TA on something like this, but I did some this is like way out there. But just bear with me here. Tried doing some T on the risk metric and just seeing how we had lower highs, right? On our risk metric, we had our peak, a lower high, a lower high, a lower high. And at the same time, you can draw this uptrend, which is higher lows, right? Ignoring something like this as an intermediate trough. You could say this here is a trend in and of itself, characterized by a set of two double bottom events right here. And you have this kind of wedge formation, but the point I'm trying to make here is that when the risk metric broke above this sort of downtrend we saw in these peaks, we broke out of, at the same time, that corresponded to this circle right here, we broke out of this wedge we'd been forming. It's not a perfect wedge. I know it's curved, but our highs weren't that much higher, relatively speaking. Like this high was 2.5x higher than this one. This one was just slightly above this one. This one is a lower high, and we weren't really forming a new paradigm, so to speak, until we broke this downtrend on the risk metric right here of these peaks. And when we did, we obviously had a new peak up here, and we've been forming another type of, you can call it a wedge, right? Let's get rid of the rainbow just so you can see what I'm talking about. Much better. Sort of a wedge, sort of a uptrend, parabolic, parallel channel looking thing, but at the same time, we're cooling off on the risk metric, which I like to see. But then we had a similar thing happen over here, right? Where we had our downtrend. It's just sort of a mini fractal of this event where we had 1, 2, 3, 4 peaks, and then we broke. In this case, we had 1, 2, 3 peaks, this downtrend of peaks. And then once we broke it, this is where we are now, right? We broke it at about 35 cents, and we went up to about 50 cents or so, 54 on some exchanges, 48 on others, and dipped down to about what, 33 on this exchange, and we're currently sitting at around 40 cents. But I like to see this mini fractal play out where, you know, this event right here, when we broke out of this, led to where we are now, right? We broke out of it around 2.5 cents. And so we 20x from there to this top over here. So, you know, breaking out of this mini downtrend here, sure, maybe it's not as big as this, right? Because this downtrend actually took a year to break, whereas this one only took like 4 months. So a third of the time. This one broke 20, what was it, like 20x? Broke up 20x to the upside. And this one is, you could argue, 3 times less significant. So maybe you still have a run up of 7x, for example, right? 20 over 3 is roughly 7. So from where we are now, 7x is not bad, right? It takes you to above $2, $2 to $3, which again, that's my target by end of year, by the way, $2.77. Someone asked for an official like statement bet kind of thing. Kind of. Yeah, and so I just said $2.77. It's based off the Hex versus ETH extension from Fit model, but don't want to kind of tangent on there. Back to the TA. It could be that, right? We could be hitting the $2 to $3 region if we do have a similar event, a dampened event at that, relative to something like this. Really interesting, sort of different TA. I don't know what struck me to do TA like this. Obviously take this with a huge grain of salt, but nonetheless, we have other charts on lookinghex.com I want to reference just before we finish off this video, like our quarterly ROI, to just show you and frame the quarter from a zoomed out perspective and show you that, hey, we've crushed it, right? If we just go sideways for the rest of the quarter and consolidate between whatever it is, 30, 40 cents, we are still one of the highest performing quarters to date on Hex and have still about 5x from the beginning. So cooling off at the end and just going sideways, I would consider it a huge win, even if we just went sideways for the rest of the month, right? Maybe form some huge bullish consolidation formation. Who knows, right? Who knows? But we do have a bounce, sort of bounce incoming. Hopefully that's not a bear flag. This bounce right here, right? It is a little weak, forming some inside bars. So be cautious, definitely be cautious. But if we pull up our regression rainbows, you see where green actually lies. Green currently is at about 33 cents. So that's definitely strong support in my opinion if we were to talk about downside potential, because I was saying this could be a potential bear flag. So if so, the 33-cent region, green, I'd imagine would be strong support because it's been strong resistance in the past, like over here with this peak, over here with this peak, with this wick over here, with this wick over here. It's been strong support. So it's generally a strong inflection point, inflection curve, if you want to call it that, but nothing's guaranteed, obviously. But we did peak into the blue for a bit, so it would make sense if we cooled down a bit, hit green maybe a little bit, and then kept going into the purple, maybe pink region into the end of the year. Like I said, a lot of models converge with the $2 to $3 end of the year kind of target, so it wouldn't be too surprising, but it would still be awesome, obviously. And I want to thank you guys finally to finish off the video for all of the support. Like I said, we crossed 7,000 subs recently. And I mean, just look at these impressions since I started making videos. If we take a journey, right? I was getting, the first day I made a Hex video, I got 310 impressions that day. That's what YouTube gave me. The next day, it was like, all right, I'll give you a little more, 826. Cool, we got to 1,000 in a few days, consolidated, and it's just been a ride from there. I'm not going to take you through the whole journey, but it's been a ride. We've yet to hit 100K impressions day. We hit 91K a couple days ago, but overall, this cumulative, the eyes that we've hit 4.1 million impressions, which is huge. To think that a tiny channel like this, because it's tiny relative to other mainstream crypto channels with tens to hundreds of thousands to even millions of in user base, right? And it's just a huge user base. And I'm obviously so grateful to have this user base, you guys that enjoy this kind of content. And it's cool because, you know, the bigger it gets, obviously the more diluted the true fans get, but you can still point them out. You can still distinguish them amongst them all. I'm kind of ranting now, but yeah, this is amazing, guys. You guys keep it up, keep sharing the content, because at the end of the day, when we look at something like adoption, right? I'm just going to finish off the video with this adoption chart. This is you guys, right? This is you guys watching the videos. This is you guys retweeting, commenting down below, visiting the website, checking out the VIP list, sharing the website on your YouTube videos, right? Like there are big channels that have shared the website, like Richard himself. I know Trayvon has shared the channel. I know Hodl Dog. Like a lot of you guys have shared the channel and the website. So I appreciate that. And you know, I'll do my best to shout you guys out as well. On Twitter, I retweet whenever I find something significant that everyone would benefit from. Obviously, I can't retweet and follow everyone, but I do my best. And so I'm kind of ranting here. So if you're still around, you're a real one. But yeah, this is you guys, right? Sharing the content and engaging. So appreciate all of it. On our way to 10K and beyond, hopefully by end of the year. Check out the website, subscribe if you haven't already. Thank you for watching once again, and I'll catch you in the next video. Peace.